like to speak with you briefly regarding the importance of adequate disclosure on gift tax returns. Making adequate disclosure on a gift tax return is crucial, not only because it enables the gift to be treated as reported, but it also starts the statute of limitations by which the IRS is able to challenge the valuation of the gift or the taxation of the gift. If adequate disclosure is not made, it's almost like the return wasn't filed with respect to that asset. So each item on a gift tax return for which reporting is made, or where reporting could be beneficial, should have adequate disclosure made to it, for the two reasons that I have told you. Now, the provisions for adequate disclosure came into the law in 1997, and this was because of the fact that the IRS could challenge on an estate tax return values reported on a gift tax return. And even though a gift tax return had been filed many years ago and the return final for purposes of gift tax reporting, the IRS could challenge years and years later and seek to have an increased value. So in order to have the statute of limitations run for a later challenge for the IRS when it looks at adjusted taxable gifts on line 4 of the estate tax return, the adequate disclosure rules came in. Now, this was done under the Taxpayer Relief Act, but the IRS has sought in more recent years to kind of pervert the aspect of, quote, relief. It came about in the 1997 Act. And in the context of adequate disclosure rules, it does this by taking an overly narrow view of what the allowance is for adequate disclosure, or let's say it mandates, in the IRS view, a very extensive disclosure in order to be considered as adequate. So don't think of the term, quote, adequate, close quote, as just being sufficient to inform. The term adequate for adequate disclosure has more of a financial statement quality to it, in which the disclosures have to be in greater depth. So first of all, on the statute of limitations, for purposes of merely having the item treated as reported on the estate tax return, I reference you Code Section 6501-C for starting the statute of limitations, and then for purposes of both starting the statute of limitations and for closing the service in a later estate or gift tax audit to challenge the earlier valuation. It's important to comply with Reg 301.6501 paren C close paren dash 1, and then there's parts under that. So the best way to achieve adequate disclosure is with a properly done, competent appraisal, qualified appraisal, done by an appraiser familiar with the rules for gift tax valuation. And that should be done. If a qualified appraisal is not so attached, then the information which is listed in the reg that I just referenced should be provided with the gift tax return. Now, what the IRS is doing is, let's say that a company has many subsidiaries, or has a subsidiary. Even if that subsidiary is fairly minor in the overall valuation of the company, and even if you have disclosure of the value of the company overall, but you don't have a separate valuation of the subsidiary, the IRS may say, well, that's not adequate disclosure. Now, the tax court may or may not agree with whether that's adequate disclosure. But the problem is the taxpayer then faces a trial on the issue, rather than a clear, as a matter of law, resolution of the fact that disclosure is adequate. So my recommendation to you is, from a practical standpoint, are as follows. Number one, it's best to have qualified appraisals done. Second, when preparing the gift tax returns, compare with the disclosures made against Reg 301.6501 paren C close paren dash 1 paren F, close paren, and the subparts thereunder, to see if what is required is in fact disclosed. That you want to do. Third, if your client wants to take shortcuts, urge them not to. For gift tax, it's important to have a really extensive return. In the book, part of the estate tax return, I talk about the fat estate tax return. For gift tax returns, they should be obese. They should be very thick with lots of documents attached. You want to make certain you have adequate disclosure. Now, I also want to caution you that with adequate disclosure, if you have a transaction that you don't believe is a gift, it's a sale, such as a sale among family members, a transaction outside of the ordinary course of business. So I'm not talking about compensation or sales of inventory in the normal course of business to a related company. I'm looking at sales of stock or of partnership interests, sales that are not ordinary course events. If you think that's at the fair market value and there is no gift involved, still file a gift tax return. Make adequate disclosure of that sale. And in that regard, I would suggest having a copy of the sale document. If there's a promissory note, a copy of that, a copy of the partnership or LLC agreement, whatever the entity is, a copy of the appraisal. If there's a trust involved, a copy of the trust. Give the IRS lots of documents, a thick return. Even if it's a straight up gift, have a copy of the gift documents, the transfer documents, have a copy of the appraisal. You want to have a thick return. So we oftentimes have many exhibits to our gift tax returns. Now, you might ask, why am I talking, since I have the book about estate planning at the movies, Art of the Estate Tax Return, why am I talking about adequate disclosure, which is a gift tax matter? Well, the making of adequate disclosure impacts the estate tax return. Because if you have adequate disclosure made, then the valuations which are reported on the gift tax return, on your post-1997 gifts, those are then at least going to be included on line 4 for adjusted taxable gifts at the indicated value. But if you don't have adequate disclosure, then the IRS may be able to increase line 4 of the estate tax return and thereby increase the estate tax liability. And besides, it's good to have, for you all who are working on estate tax returns, have properly done gift tax returns as well. So I hope that this little snippet is helpful to you as a reminder of the importance of adequate disclosure on gift tax returns. Thank you.